Well, in a fortnight, the majority of Australia's biggest companies have reported their full year profits. And though those results look back over the past financial year, it gives a chance to see which of them are outperforming right now. One of those clearly is the Commonwealth Bank. Now, a sponsor of Business Weekend, of course, it came to grow to become Australia's biggest company during the year, as its shares at one point hit $134 apiece. Well, our biggest bank reported a 2% fall in cash profit, down to $9.8 billion, but that result was much better than anticipated. Its dividend, higher than expected, and surprisingly, its bad debts fell despite the tougher economic times. And something else catches the eye with the Commonwealth. A deliberate and sustained investment in technology years ago puts it on a much higher rating than its peers. More than a third of all Australians call the Commonwealth their primary bank. It's a powerful position for the bank's chief executive, Matt Comyn.
Well, I mean, the biggest driver overall, of course, has been unemployment has remained low. And of course, with rates higher and inflation higher, we can see the real effects of cost of living on households and the pressure that that's putting on households. And it's really, I think, leading to sacrifices for people to, they're not able to enjoy some of the things that they were able to. But ultimately, when you've got, as long as unemployment's low, that doesn't tend to drive any changes in losses, or it's been sort of a modest increase.
But there are businesses going broke. There is an increasing number of smaller businesses going broke. You somehow seem to have avoided them to the point where you can actually reduce the amount of bad and doubtful debts on your balance sheet.
We could. We also were coming from a year overall we've provided, as we like to be, conservatively provided for a wide range of economic scenarios. You're quite right. If you look at the insolvency data, we're back now to the highest levels of insolvency we've seen for many years, probably 10 or so years. But there wasn't a lot of that sort of activity during COVID. I mean, obviously the ATO would be starting to quite reasonably ask for some of the outstanding tax debts. Some of the smaller businesses with less financial resilience, probably under more pressure. Not many of them would have loans. Then we've seen individual sectors which have been really challenged, quite well known, particularly in construction, which, I mean, is a concern. I think it's clearly a concern insofar as...
But you've missed this. My point is that somehow the Commonwealth Bank has missed this. It hasn't picked up any of the bad and doubtful debts significant out of the construction industry, out of those smaller businesses. Somehow you've avoided them to the point at which you've been able to reduce the amount of bad and doubtful debts, which helps your bottom line here. How have you done that?
Well, that's a function of the loan impairment expense in an individual year, but there's many other elements that sit behind that. That's the profit and loss expense versus balance sheet as the changes in terms of provisions and for credit quality. So if you look at our troublesome and impaired assets, which are basically securities or businesses in this case that we have some concerns over, you'll see an increase. If you look at our arrears rates, which is the proportion of, let's say, in our home loan book or for customers with a personal loan that are behind on their repayments, that's continued to tick up over the course of the year as we expected. But you're right insofar as if you look back through many years, those numbers are not above where we've seen in prior year averages. And so I think when you see the contrast between the experience that people are feeling on a day-to-day basis versus what's actually showing up in terms of credit losses, and you've seen cycles where those credit losses can change quite dramatically. We haven't seen that in the banking system in Australia. Quite frankly, there's not been very high levels of credit losses globally either. But what we have been really focused on is making sure we're supporting our customers and providing financial assistance when we've never been as proactive as we have been over the last 12 months. We've put 132,000 temporary financial assistance packages in place. And we do that. Most of those last for about 70 days. We're finding that people who are coming to us, or we're reaching out to ask if we can support them, being able to put a temporary payment plan in place. We've made that sort of support much easier. We've put in place a variety of different support measures, safety nets in place to be able to help people, because we've got the financial capacity and strength to be able to do so.
So you've got 35% of Australians who call the Commonwealth Bank their primary banking facility, right? And you've got a big wedge of the housing market. Is it actually hard to pick and choose who you lend to, who might be potentially a risk in the future when you've got such big market share?
Yeah, well, we're really lucky and very much value and appreciate the opportunity to serve so many Australians at a personal level, or also just over 1 in 4 Australian businesses. mean, that actually helps us to be able to bank them, because that main bank relationship is often, you know, the account that you're using that you might be getting paid into, the account that you're using for, you know, inwards and outward payments. It actually makes it much easier for us to be able to identify who we should be lending to. I mean, for many of our businesses, we're able to make, and even in the year ahead, some real improvements, I think, in the way they will feel the experience of banking with CBA. Lots more work being done on an automated basis as well. So I think that's one of the reasons why our origination quality, or our ability to identify risks, is probably better than many of our peers. And we'll always be trying to find the right balance to support any credit-worthy borrower. Where we feel that we can lend them money, then of course we'll be inclined to do so. It's part of the business model of a bank. You shouldn't expect to always get every loan that you've extended to be repaid, but clearly you don't want to have too many of those where you're not able to get the money back. That can, you know, obviously has a very negative impact, and has been a problem for financial institutions where things have gone awry.
Can I just take you back maybe 6 years or so? You know, when you came into this, the bank was really, and the reputation was in a crisis point at that point. You deliberately invested enormous amounts of money into the apps, into the online, into the technology of the bank to really transform it. Do you think what we're seeing here in the performance of the bank, the rating of the bank, that's the repayment of that investment in technology at that time?
Yeah, look, it's a continuation of the investment that was set in place really by David Murray in the early 2000s, and we've, you know, in Ralph's tenure.
But to be fair, you took it to another level.
Sure, we've continued to increase the investment. We've lifted it quite substantially. We're now a little bit over $2 billion. We feel that the efficacy, or what we're getting from those dollars, is improving. So I think that's a big part of being able to, for any business, is to have technology that makes it easier for your customers, in this case, to bank with us and to be able to deliver a superior and rewarding experience. We think that that's extremely important.
But if you work this out, why can't your competitors work this out? They don't have the same rating. They've certainly said that they have invested in technology as well, but somehow you've been able to make that investment go straight to the bottom line in terms of market share and in terms of the profitability which the bank is now presenting.
Well, we've tried to be really focused. I wouldn't like to speak on for any competitor. We've tried to be really focused about strategically where we want to invest, and, you know, operationally try to execute really well every day. And I think in technology, it's really important to have a, you know, long-term plan, and to try to move thousands and thousands of, you know, engineers, people that we're trying to deliver particular propositions. We can see opportunities to keep improving, certainly in the year ahead, and quite substantially, I think, over the next 5 years. And it's one of the sort of strategic opportunities that we're really pursuing. And you touched on in your first part of that question, Ross. I mean, the reputation and standing. We're a very large brand and company with, you know, a proud history, and we're fortunate to serve more than 13 million Australians. And as you and I both know, reputation takes a long time to build up. It can erode quickly, and we're really focused on that every day.
Can I just ask you one final question? I noticed that a number of Labor politicians, senior Labor politicians, current and former, have been taking a bit of a swing at the Reserve Bank of late, effectively saying if you raise interest rates, you'll basically plunge Australia into recession. I noticed also Donald Trump suggesting the president should have some role in setting interest rates in America. I'm just wondering about your own view about the role of the Reserve Bank and its independence, and whether politicians should really have a say in deciding where interest rates are in Australia.
I think the importance of the central bank is of critical importance to Australia, and I won't speak on behalf of other countries, but that is an important aspect, I think, of what's served Australia well over a long period of time. It's also an important aspect when you think about sort of international investors. I mean, one of the reasons why they would be prepared to invest in the Commonwealth Bank, I'd say, in Australian companies, is we have a reliable system of law. We have, you know, a much more stable political environment. You know, very important public institutions like the central bank need to be able to act independently and consistent with the mandate that is in place for them.
So you'd be troubled if politicians had more influence over the decisions of the Reserve Bank?
I would. I think the independence is an important aspect of that. I think anyone who works in a public company or an institution like the central bank, I mean, I'm appearing in Parliament, the House Economics Committee later this month, but to me that's entirely appropriate. We should be accountable to a variety of stakeholders. I think it's really important that, and I think Governor both Lowe and Bullock do a great job of communicating regularly the decisions, but ultimately they've got a mandate. They need to be able to act independently to deliver on that mandate.
Matt Comyn, many thanks for your time.
Pleasure.